Thank you for checking out Fieldman Rolapp Associates Municipal Market Update, which we refer to as MMU. We're recording this on February 15th. It is our 33rd posting. We have taken a bit of a break. Basically in November, we stopped recording these and rates have gone up since then. So we have a lot to report, but we'll be sure not to stop recording in the future because we do not want rates to go up in a fashion that they have over the last few months. But we thought we'd take a bit of a break. We had recorded these the first and third Monday of every month. At the time, we thought there was not a lot of activity going on and it would make sense to do them once a month. And so we are scheduled to do them once a month now, the 15th of every month. But it's kind of interesting to us that once we decided that, there certainly was a lot of market activity. And so let's get into that. But before I do that, once again, Fieldman Rolapp Associates is a municipal advisor to government. We've been around for about 56 years now. That logo is a bit dated. We have a new one that will get posted there for you soon. That doesn't really celebrate the time we've been in business, but really talks about some of our core principles. On our next slide, on our first slide, what we are focused on is the S&P 500, a weighted average of the top 500 stocks within the United States. And hopefully what you're noticing here is a general trend upward. I've talked about that sell everything rally in March of 2020, when we all realized that COVID would really become a part of our life. I don't think we quite realized how much a part of our life it would become. But you see here the stock market declined in March of 20 and then kind of went up significantly after that. And then if you go to the far right, you can see towards the end of 2021, you see some upward ticks, some downward ticks, upward ticks, downward ticks. You've heard a lot about investors buying into the declines. Well, we are on that decline phase now. And the question is, will they do so again, or is now something different? And what you might ask, why am I spending time on the S&P 500 when I've been talking about interest rates and municipal bonds? Is this is kind of a risk on or risk off type thing, and kind of what investors are interested in investing in. And right now it looks like there's risk off. And when they do that, they generally municipals might not do as well. And you can see here the S&P has not done as well as it has in the last few months. Now, why is that, and what is different now than all the other times I've done this recording? Well, this side, there's probably a big spike jumping out at you, and that is a substantial change in the consumer price index. And I've talked about how the Fed was looking at like an average for CPI versus just a 2% threshold, and I had talked about how that would leave us some room for higher inflation for a period of time. Now, when I said higher inflation, that in the realm of possibilities was not a 7% number. And so I don't think I was the only one surprised at how much inflation we've had toward this year. And so that certainly has taken investors, they're taking this into consideration, trying to reevaluate things. And we've seen a real shift in interest rates. But I mean, just really take a moment to look at this slide and kind of see what we're looking at with an average CPI of 2.2%. Last year at 1.4, and then to really spike at 7. Now that 1.4 is probably low because of the, because of COVID and some change in consumer behavior. If you recall that there was a point in time where barrels of oil is so difficult to store them because there's so little demand for them, that I think they had a negative value, meaning that someone would pay you if you could just take their oil away from them. And certainly that's changed now. People that are listening to this, they're probably saying they paid something like $5 a gallon. So you can see that 1.4 to 7% we're filling at, whether it's the grocery store or many other places. Now, what's impacting rates? And I've often told you that supply and demand is a really important thing to look at. I mentioned that sell everything rally when it was a stock market, and you can see that March of 20, that's exactly what's there. We've added the 3-month moving average in here to try to give some perspective there. But what you also probably notice is that red line to the far right. And let me just take a pause for a moment. If it's a green line, what that means, or a green bar, What that means is that money is flowing into the municipal bond fund. So that means there's a lot of demand for municipal bonds. If there's a red line, that means money is flowing out of the municipal bond funds, so less demand. In this case, we have had outflows again. And so that puts upward pressure on municipal interest rates when there's not as much money available to buy bonds. So we get to the next slide, though, a counter effect to this is if you look at these three lines, we have the 21 and 20 kind of weekly average volume. What you're probably noticing that those are over that light green line, which is the 2022 weekly average volume. So if you look at 20 and 21, we are somewhere between 9.6 and 9.9 billion per week. And if you look at 2022, we're at 7.6. So pretty good decline. So even though we don't have as much money flowing into municipal bond funds, we also don't have as many available for investors to buy. And so this is a counter to that reduced level of demand. Now, I've showed you this chart probably 32 times at this point, and what I've talked about in most of those recordings is that the red line is scraping the bottom of these gray bars. And let me explain what we're looking at here. To the far left are interest rates. To the bottom is year. So a 1 represents a 1-year maturity. A 30 represents a 30-year maturity. And so the gray bars, what they represent are the range of interest rates that each one of those maturities has had going back to 2005. And the measurement we're looking at is the AAA municipal market data yield curve. AAA is the perfect credit rating. You can have AAA, AA, and single A, and then below that you get the triple B and some other categories below that. But AAA is the highest. The MMD, that municipal market data yield curve, that is generally a good measure of where interest rates are for each one of those maturities. And so when that red line was scraping the bottom, we're calling that all-time lows. I think what's safe to say now is we're still low, but we're not at all-time lows. And so we'll continue to monitor this, but this still could be a very good time to take advantage of low rates. You just won't be taking advantage of historically low interest rates. And try to capture that on this slide as well. This is that AAA MD. And what we're showing here is that yield curve over time. So we just highlight the 1, 5, 10, 15, 20, 25, and 30 years. And then if you go back to that, maybe look at the black line, that's a year ago. And you could just see how low interest rates were at that point in time. If you go to the red line, that's where rates were in 2017, so 5 years ago. Then finally, that light green line represents where rates are as of late last week. To put this in perspective, that light green line and that black line were very close to each other. So the short end was a little bit higher than the short end of the black line, but then that long end, so the 20 to 30 years, were a little bit lower. And so now you've seen that just shift upwards, and I suspect inflation and demand are a significant component of that increase. So we've given you the data points for the rest of February. Now we're not recording another one of these till March 15th. So if you have interest in the March activities, please feel free to reach out to one of the parties listed on the next slide. And as we adjust our format for the monthly recordings, we'll adjust this to get the full month on there, but we kept this format for now. We have President's Day coming up. Given how much market activity there has been, hopefully folks can really enjoy that holiday. I have a feeling people are looking forward to that. On our last slide, what we've highlighted here are the registered municipal advisors for Fieldman, Rolapp Associates. And I encourage you to reach out to any one of these parties. They have good market data and can be a great resource for any additional information. But for now, I just want to thank you for taking time with us and look forward to having another recording on March 15th. Hope you can check it out then. Thank you.